Hi everyone, this is Lauren with the Central Arkansas Library System. As you can see, today's program is going to cover how to manage your small business finances with a balance sheet. So in this program, we're going to cover what a balance sheet is, the importance of using one, the contents of an average sheet, and the information you'll need to make your own. Plus, at the end, there will be some resources to get you started with creating your own. So what exactly is a balance sheet? The balance sheet is one of the three main financial statements, along with the income statement and cash flow statement. A balance sheet gives a snapshot of your financials at a particular moment. It shows you what your business owns, what it owes, and what money is left over for the owners. Because it summarizes a business's finances, the balance sheet is also sometimes called the statement of financial position. They are usually prepared at the end of a reporting period, such as a month, quarter, or year. So why are they important? Because your balance sheet reflects every transaction since your company started, it reveals your business's overall financial health. At a glance, you'll know exactly how much money you've put in or how much debt you've accumulated. Or you might compare current assets to current liabilities to make sure you're able to meet upcoming payments. The information in your company's balance sheet can also help you calculate key financial ratios, such as the debt to equity ratio, which shows the ability of a business to pay for its debts with equity should the need arise. Even more immediately applicable is the current ratio, which is your current assets over your current liabilities. This will tell you whether you have the ability to pay all of your debts within the next 12 months. You can also compare your latest balance sheet to previous ones to examine how your finances have changed over time. So, exactly what items are on a balance sheet? A balance sheet is made up of the following items. So our first section here is going to be the assets. The assets section of a balance sheet breaks down what your business owns of value that can be converted into cash. Your balance sheet will list your assets in order of liquidity. That is, it reports the assets in order of how easily they can be converted to cash. So when we see our section here, this is our assets section, and we see that things like petty cash and temporary investments are placed above things like buildings and equipment. That's because these items up here can be converted to cash quicker than the items down here. Then our next section is going to be liabilities. A liability is something that a person or company owes, usually a sum of money. Liabilities are further broken down into current and long-term liabilities, just like assets are. And then our last section is going to be shareholders' equity. It shows how much the owners of the company have invested into the business, either by investing money in it or by retaining earnings over time. This figure is representative of your net earnings. So this is what you're going to need to fill out your own sheet. So we'll see that we need our assets. This is going to be our current assets like treasury bills, money market funds, and then these are going to be our long-term assets like property, equipment, and intangible assets like patents and licenses. Then we have our liabilities. So these are our current liabilities and our long-term liabilities. Some current liabilities are accounts payable, which is what you're paying your employees, and current maturities of long-term debt. And then our long-term liabilities are things like bond payable and deferred tax liabilities. And then our next section is going to be information on your equity. Equity is broken down into two categories typically. The first is going to be share capital, which is the amount of money a company receives from its shareholders for business purposes. And then the next one is retained earnings, which is the amount of a company's profits that aren't distributed to shareholders as dividends. The funds are reinvested into the business instead. And then lastly, our total liabilities and equity section. On the balance sheet, assets equal liabilities plus the shareholders cut. You'll want your balance sheet to include this calculation to provide insights into your financials. This may seem like a lot of information to try and gather for your balance sheet, but this information is essential. If you want to claim tax deductions, for example, it's important to note how fast and by how much your assets are depreciating. Balance sheets also include the cost of labor, which is also important for tax calculations. If you ever want to sell the business, you have to be able to say what the real value of that asset is, and that often has little to do with its potential, however good it is. So that's what makes this information so important for you to try and gather. Since this is a video, you won't be able to click on anything, but there will be a PDF in the description that has these resources and links to them in the description. So, ToggleTrack is a non-CALS affiliated company, but their balance sheet template is a great place to start because it's fully customizable to your needs and doesn't require any type of sign up. The Small Business Administration is a very helpful source for all small business purposes. and they have a Manage Your Finances webpage that has a lot of great information. Lastly, Data Axle Reference Solutions, which is formerly known as Reference USA, is a CALS-provided business database. It can be a daunting process to think about starting a small business, but hopefully the tools and information given in this program make it seem a little less scary to start a balance sheet. As always, we thank you for watching this program, and if you have any additional questions or need some clarification on anything I've covered in this program, feel free to reach out me via email and I'll do my best to help.